Good afternoon, everybody. Welcome. Welcome to the market close for November 27th. We are almost there. The end of the month is coming up, and we do have a market close, guys, on a Friday. You guys earned it last week, but I was too sick last Friday to really talk. So that got shifted ahead to this Friday, and it's going to be not just a market close. It'll be a month close, because that will be the last market day in November. As we move into December and we start to talk about some of those other things like, well, we got a Santa Claus rally potential. There's tons of stuff we can certainly talk about. One of the focuses we're going to look at during today's show is we're going to look at this whole tariff thing. So those of you who have been living under a rock may not know, but the other night Donald Trump tweeted, or not tweeted, I guess socialed or posted. I guess we'll just call it posted. He posted that he is going to, on day one of his inauguration, he's going to basically hit Canada and Mexico with a 25% tariff on everything. That sounds pretty darn ominous, but we're gonna dissect that after the bell. We'll take a look at that. We'll figure out what that means. Is he actually really meaning what he says? And I think the answer might surprise you. That's coming up, of course, after the bell. But before the bell, we have, let's pull this up. All right. Oh, I still have the goat up. Oh, that's hilarious. All right, give me a second. Let me get rid of the goat. We got, of course, a market. In the TSX, we're in the green today. We're actually having a good month. So as you can see, this blue line at the very, very bottom, this is where we entered November on the TSX. So we are well above it. So for us, quite literally, for us to have a red month, we would need a black swan event. There's nothing else that's going to get us there. Keep in mind, the markets in the U.S. are closed tomorrow for the Thanksgiving Day holiday, so there's not a lot of catalysts out there. There really, really isn't. So I'm calling this month early. I'm calling it green. We got it. We're fine. It's going to be awesome. All right. Oh boy. All right. Now today the S&P 500 not as good a day as us. They are in the red. They're down 0.39%. The NASDAQ are also in the red, down 0.94%. Dow Jones, once again, another one in the red. Now gold's doing fine. It is up 0.21 in the green. Silver is down a full percent. Holy banana bread. WTI, kind of flat. It is down 0.06, but that's really not a lot. Bitcoin, though, having a fantastic day. As you guys probably saw, we had a little bit of a correction here. That began basically at the end of last week, and we went into this nice correction, very healthy correction. Today, we're drifting back up. The last hour, though, we're down a tiny bit, but I'm not too worried about that. It's looking pretty healthy for Bitcoin. Ethereum, and just for numbers wise, Bitcoin up 5.24%. Ethereum, look at them. Look at Ethereum. They're up 9.13%. So Ethereum doing the same thing, maybe just a little bit better. So nothing wrong with that at all. All right. Now, let's pull up the heat map and see what we got going on. We got the green in here. A lot of things are pretty muted, but we do have some big things. Look at this. Alimentation Couche-Tard up 4.43%. Holy banana bread. Oh, good coffee. Still, the cough is lingering a little bit, so it's kind of one of those things that we may run into it a little bit through today, but it is getting better, believe it or not. Excuse me. CNR also up 1.64%. TD's doing good. They're up a little bit. Who is this? Oh, Topicus. Topicus is doing pretty good today. Oh, excuse me. Up 2.86%. I just don't know when this cough is going to be gone. I did discover one thing this morning. I went outside, and when I went into... excuse me for a second here. Just give me 1 second, guys. I'm going to try to cough this out a little bit. Oh boy. Yeah, so this morning I went outside, and because I was taking out the cardboard for the recycling, the change in temperature is going from indoor warm to outdoor cold. Oh boy, that triggered me. So it has caused one thing. So as you guys probably know, we've got our financial Vlogmas coming up. The first one is on Sunday, December 1st. I had this shot planned. I thought the best way to start it would be to start at my desk, then pick up the camera and me, walk out of the room, go down the stairs, and go outside into the street. As just kind of a way to reflect that a whole bunch of stuff is changing, that we're gonna, that we're playing outside the rules for that Christmas event. But I have a feeling that I have to cancel that one shot. I'll have to come up with something a little different because going into the cold, if it's still doing that, holy banana bread. I don't think I want to have that. So for the most part, though, I'm sleeping through the night without coughing, so I think it's done. I think it's done. It's just lingering. And you guys know how it is. Sometimes you get that cough that just like, it's like, holy banana bread, I'm not sick anymore. Go away, cough. So, yeah. Anyway, that is just that. All right, let's switch over to the U.S. And over the U.S., of course, we are seeing some red. Look at this. NVIDIA down 1.6%. Broadcom down 3.43%. Microsoft is down. Meta's down. Tesla down 1.59%. So they're it looks like they're going red into Thanksgiving, and we'll have to see if Black Friday is any kinder to them. But for now, yeah, things are not looking great on the U.S. market. Crypto market, another story. It looks like spring. It's so green. Bitcoin currently up 4.85%. Ethereum up 8.65%. Even looking down the hole here of altcoins, I'm still seeing mostly red. But as you guys know, I like to take a look at a coin I've never seen before. One of those 15,000 crap coins that sit out there. It's a green market, so let's actually get rid of the green. Let's go for something that's absolutely not doing so well. Let's see here. We'll grab this. I don't know what this is. Hillstone Finance. So here is your Hillstone Finance coin. It is worth a little bit less than a penny. So, yeah, like 0.89. I guess you could say 0.9. 0.9 of a penny. At one point here, look at this. It was actually worth, holy banana bread, it was actually worth 25 cents. But yeah, I don't know what this does. Obviously, it has the word finance in it, so I'm going to think it's something to do with finance. Yeah, it's like, oh, it's like, no crap, Sherlock Holmes. How did you figure that out? Yeah, it's another piece of crap. It's a piece of crap, guys. It's a piece of crap. I will never invest in Hillstone Finance, in this coin. And I'm crypto friendly, believe it or not. I am crypto friendly. So I will tell you guys, there's a lot of good coins out there. There's a lot of coins that I certainly would be willing to put money in. Your Bitcoins, your Ethereums, Solana, maybe not BNB so much, but XRP for sure. And I hate to say Dogecoin. But even Dogecoin. Oh, and that hurts me. It hurts me to say that. All right, guys, it is time to get to the chat and say hello, because I see a lot of stuff happening in the chat. Let's, whoops, I don't know what I did. All right, here we go. I think there we go. Now we got it up. All right, let's pull up the chat. Jonathan, we'll start with you. Am I late? Not this time. No, Jonathan, you are not late at all. I actually thought of you earlier today, Jonathan. I was looking at the Weather Network's winter forecast, and they were mentioning how the Maritimes are looking to have a not that bad winter, a not bad winter at all. A little bit better than ours, but congrats. You guys deserve it. We got Mary in the house. Oops, here we go. Oh, the good old hello. And of course, if Mary's in here, guys, that means you gotta hit the like button. Right now we got 10 likes. Let's knock that thing up to 15. We'll start low. I'll have some coffee as you guys are hitting that like button. Oh, the coffee is so good. So good. Guys, we're still at 10. What's going on? What's going on, guys? There we go. There's 11. It's begun. I'll leave that in your capable hands as we talk to Larry. Up 31% on ASPS. So, right, once again, that eviction company that Larry has been playing. Friday was a 17 million market cap, now 26.6, 25 million in cash, 153 revenue, 190 debt. Not too shabby, not too shabby. And this is what I love. Larry's thinking outside the box, right? With financial crisis comes things like, of course, evictions. That's one of the reasons why looking at an eviction company, not that bad of a thing. Oh, by the way, guys, you guys crushed it. We're at 16 likes. Keep them going, though. Unless you're holding off until the next time I say, let's get to 20. And that's fine. That's fine. Roku Stittsville is saying, the market treated me like a night at the casino where I don't know how to play blackjack. Oh my God. That does not sound very good, Roku. Oh boy. That sounds to me like you've got some red going on. You got some red going on there. JJ is popping in just to pop in. So, hey-o. So working right now, so won't stay long. All right. Fair enough. You know, those little microorganisms need someone to help them out. Mario says, good afternoon. Let's see. Take some Buckley. Tastes bad, but it works. I know. Actually, you know what else works? And I didn't have any this time around. Those Fisherman's Friend are really good, too. But that's the thing, too. It really depends. Like, I didn't get a lot of congestion. You know, mostly throat, lungs, all of that. I find if I get congested, stuffed nose, most of those lozenges and things, like right now I've got, I'm working on these here. Vicks Vapo Cool Max Winter Frost. They, it does soothe my throat, but they work super, super well with congestion for sure. All right. Jungle is in the house, bidding JJ a good night. We got Sammer with a hello all, and we have Niece in the house with a hey all. Hello, Niece. Good to see you. All right. Excuse me. We are getting very, very close to the bell. After the bell, we're going to talk about that tariff. And I got kind of I'll say an analogy. We got an analogy we can play in regards to that, to what I think is going on. So we got all of that coming down. There's also, and I don't think we've talked about it. Well, we did briefly on the weekend. There's also that whole GST holiday. That's also going to be going down pretty soon too. What is it? December 14th until February 15th. So we got that going down. That's going to be kind of interesting to sort of see how that all works out as well. We're less than a minute to the bell. So guys, if any of you have headphones on and you don't want a loud bell, excuse me, now is the time perhaps to maybe turn the volume down a little bit. I don't want to hurt anybody's ears. I don't want to hurt my ears either. So, okay. No, yeah, this is good. We'll keep the coffee going. We'll keep everything flowing. Whoops. Oh, I heard that bell. I heard it. It made a little bit of a noise. Oh, God. You know what? It's funny. I was in here editing all afternoon, and my throat was My throat was absolutely not acting up. It's not until now. Just give me 1 second here. All right, now here we go. There we go. Nice quick bell. Market is now closed. Oh boy. Let me have another sip here, and then we're going to talk about these tariffs. All right. So these tariffs. It's kind of an interesting thing. When you look at what Donald Trump has said, he's basically sort of saying, well, look, I'm looking for... excuse me. I'm looking to put these in place until you tighten up the border, which is kind of an interesting thing. So he's not saying, I'm just throwing these tariffs at you. Excuse me. He is hinting that there's a secondary agenda going on. And that has me sort of thinking. Let's go on a little journey here for a second. Let's say, for example, I wanted to sell my microwave. And I'm looking at it, and I'm like, okay, what do I want for my microwave? I'm looking for $100. So if I were to go, excuse me. All right. If I was to go, you know what? I can actually talk one of these things in here. So let's put this in here. Let's soothe up the throat a little bit because we don't need it. You're getting echo feedback. How are you getting echo feedback? All right, give me a second. Let me take a look and see what. Oh. There we go. I think that should take it. Hopefully that fixed it. I've noticed a second feed that popped up on my sound levels. So I think my iPhone started recording the sound in addition to the regular. How the heck did that happen? I do not know. But all right. I think we're good. Now. Let me know. All right, we got Bleak in the house. And echo. Some echo going on with the sound. Echo feedback. Echo. All right, and the wonderful Meetings of Owen is letting us know that it is better. Fantastic. And VLG says better. Yeah, something popped up. I must have hit a button or something that somehow sent the sound into 2 different mics. So that was 2 mics. It was almost like me in stereo, but in an odd, bizarre way. Okay. So here's kind of what I was thinking. If I was trying to sell my microwave for $100, if I were to put it up for sale, we'll say Facebook Marketplace or wherever, and I say, okay, well, I want $100 for it, so I'm going to put it up for $100. I might get lucky and somebody might come by and just give me $100. But most likely, people are going to come and they're going to say, okay, well, would you accept $50 for it? And I'm going to end up selling it less than what I want. So that's kind of a strategy. So what I would do in this case is instead of the $100, I'd be like, okay, it's a good microwave. I'm gonna list it for $150. So I'll list it for $150, and maybe sometimes it actually really works out when somebody comes along and just buys it for $150. Then woohoo, I did fantastic because I only wanted $100. But then that person who beats me down comes along and says, oh, well, I'll give you $75 for it, because they'll lowball me, and I'll be like, nah, I can go as low as $100, and then they'll say, yeah, okay, sure. So what I did is I got what I wanted, but here's the thing: that person thinks that they owned me. They're like, oh, I owned that person on Facebook. Beat them down by $50. I got a steal. Holy cow. That's what they're going away thinking. So now let's turn this to Donald Trump. So Donald Trump is sitting there and he wants something. And he might be thinking, okay, I want something from Canada. I want something from Mexico. It doesn't even have to be the same thing. We'll even forget about the Mexico for this arrangement. But he wants something from Canada. And he's thinking, well, they're going to hem and holler if I ask for what I want. So why don't I throw them something they absolutely won't want? So instead of asking for whatever he wants, he comes out with this statement, oh, yeah, 25% tariff across the board on everything. And then you know what? Here's the smart thing to do. Do nothing. Just let Canada sit and stew for a while. Let the Canadian media run wild with it. Let the politicians in the House of Commons debate it endlessly and blame everybody but their dog. And then, once Canada is at that point, and Donald has a long, he's not even being sworn in until January 20th. So he can let this fester as long as he wants. But once he thinks that things have festered enough, that's when you come in and you say, all right, well, you're right. Maybe that 25% is a little harsh. You know what? I can pull that back. But I need something, though. How about this instead? And that's where whatever it is he really wants, that's when he brings that in. And at that point, Canada, even if whatever he wants is something that would have made us him and haw, a week ago, we're going to be like, oh, thank you for being so nice. And at that point, he's won that game. And that's what I think is going on. I think the 25% is, you could call it a red herring if you want, but I think it's basically just part of his the art of the deal per se. He's softening us up so that he can get what he really wants. So when all is said and done, when we get to January 20th, I don't think we're going to see this. I don't think at all. By then, we will probably have consented to whatever it is he actually wants. Now, maybe he does want something to do with the border. Maybe. That could be. He may have played his cards all right up front. Probably not, though. But at the same time, as we're trying to get out of this 25% tariff, we're some of the premiers are looking at the border, the feds are looking at the border and looking at ways to tighten things up. So he may end up getting that also as kind of a icing on the cake for whatever it is he's truly after. So this is kind of interesting. So when, I guess as investors, it's where we don't want to panic. We don't want to sort of look and say, okay, everything is going to be absolutely screwed in January when this all happens. No, it's nothing like that at all. Donald is playing. You have to realize, Donald is not a political leader. He's a businessman. He makes deals. That's what he does. And that is right. That is deal making 101. That's what he's doing. The problem is, a lot of the politicians, they're looking at him like he is a politician. Sure, he's in a political role, but he's not a politician. And that's the mistake a lot of world leaders make with him. When they sort of sit down and they sort of say, he's very unpredictable. Well, he's not as unpredictable as you think if you look at his strategies from a business perspective and his tactics from a business perspective. So that's kind of what I think is going on with this whole tariff thing. And I'm not even concerned about it, to be honest, because I'm pretty sure he'll play his hand eventually. Those 25% tariffs are not going to come to pass. Just something to keep in mind. All right. Let's see here. Paul. Let's see. Sell to open covered call. MSTR 4:30 November 29th. Pray I don't get called away on Friday. Talk to Wealthsimple support. And they said if called away on Friday, sold shares next morning pre-market. Okay. Fair market. Fair deal. Let's see. Kenneth says, Trump just sit and laugh. Mexico and Canada debating what to do with 25% tax. Even he isn't even in yet. He is a businessman. He knows how to deal with money. Exactly, Kenneth. That's exactly what I was saying. So I think we're good. Jungle says, Mr. Trump, it sure would be a shame if all your oil stopped at the border. Yeah, but keep in mind, he's not going to actually pull it off because it's because you'll hear, like, it's funny, like a lot of people, a lot of analysts and economists are telling him, hey, if you do that, it's going to cause inflation. It's going to cause inflation at home because any of the Canadian products that we need, we're going to have to pay more for it. He knows this. And that's why he doesn't give a damn about it, because he's using it as a ploy. If he was seriously going to do it, he would certainly have to take that into consideration. You have to look at it. Sometimes he plays the, what's the word? I don't want to say the idiot, but sometimes he does. Sometimes he'll approach something and make himself look like he really doesn't have a clue what's going on. But sometimes I find it hard to believe that he doesn't in a lot of those scenarios. Sometimes I think it's just by coming in with that way, people underestimate what's going on. And that can give a person an advantage. So it is something to sort of keep in mind as this all comes through. All right. Michael says, let's see, Pfizer longer term will be higher next year to also get a 0.42 dividend while you wait. Yeah, no, I am bullish on Pfizer long term. They do make a lot of very important drugs, cancer drugs as well. So yeah, and there's nothing wrong with having a half decent dividend if you're, if you've got full conviction on Pfizer and you're putting them into your portfolio as sort of one of your hold forever stocks. Nothing wrong with getting a half decent dividend from that while you're waiting for those shares to recover. Paul says, bought more MicroStrategy shares with premium on limit order and barely got the 3 p.m. EST fractional buy order completed. Oh boy, yeah. Oh, Paul, you got a lot. I don't actually know the exact number right now, but I know that you have a fair number of MicroStrategy shares. I was looking at them today, and I'm like, come on, MicroStrategy, I want you to get back up to 450. But we sort of have to wait to see what Bitcoin is going to do. I think right now, let me just take a quick gander. Oops. I'm actually on the Ethereum. So yeah, the 4 o'clock candle right now is green for now. So we'll have to see. We'll watch what it does overnight. I don't foresee Bitcoin breaking 100K over the next day with Thanksgiving and, a lot of things closed. But, keep in mind, Bitcoin is a worldwide commodity. I see it. I kind of view it as a commodity. So I think it can certainly do well. But I'm thinking that 100K, like we got within $300 of 100K USD. I'm thinking it's coming soon. I definitely, will we see it though before the end of this month? That's the big question. I think there's a possibility, but I think we'll definitely see it early December, and then we'll start to break through. So that's going to be very, very, very interesting. So I can't wait. All right. Michael says, I bought PED at 0.84 being debt-free with new wells and beat on earnings with book value going up to 119 with upgrades to 125 to 225. I think Zax has a strong buy on it also. Let's take a look at PED. Let me see here. I think it's 6. Oh, maybe not. Oh, it's command 6, not option 6. You see, that's how I end up with turning stuff on, is I accidentally hit command instead of option. All right. Let's come over here. I was looking at Rocket Lab actually the other day. What was this? PED. So here we go. Petavico, 84 cents. So yeah, it's a penny stock, of course. I kind of expected that. Michael, you have you have a fond love for the penny stock for sure. But let's look at the last year. We got a little bit of movement. That's good. That's always good. Let's see here. I'm not really getting any information here. And because it's US, I may not get a lot of information here. Pull up my key data and see if I get anything in here. I am getting one thing. I know that they're profitable, so we do have a small return on equity. We got some return on assets in there. I don't know what their debt is, but you did say that it was pretty low, so I'm going to take your word on that. I'm still always cautious. I'm always cautious on penny stocks. Even if their fundamentals are fantastic, the problem is with a penny stock is, even with great fundamentals, when there are market stimuli, they can move up and down really fast. So you can make a good amount of money on a penny stock, no doubt about it. But you can also lose a big amount of money on a penny stock. And when we eventually move back into a recession, that's not going to happen soon. I'm going to put that out there. When we move back into a recession, that's when some of the penny stocks, even ones that you think, sometimes even ones with great fundamentals, don't make it. So you will see a lot of companies sort of get shaken out. And the same idea with crypto. When we go into a crypto winter, of those 15,000 crap coins, a lot of them aren't going to make it. On the other side of that winter, you'll probably still have 15,000 crap coins, but there'll be a lot of brand new ones in there. So just something to keep in mind. All right, Monday. Paul says, I want plus 430 on Monday. Nice. Let's see. MSTX could be better. And you're mentioning the PED has no debt. Yeah, I was kind of thinking that. MSTX, is this another... Are you sending me to another penny stock, Michael? Let's find out. MSTX, here we go. Defiance Daily Target. Okay, there we go. No, this is the MicroStrategy ETF. It's a 2X long. Nice. So, as you can see, here's a beautiful thing. When you're playing leverage, look at the movement. Like, look at this. You've gone, this ETF has gone from $21 all the way up to $172. That was all on that power of what MicroStrategy was doing. But MicroStrategy is down now, and you'll notice how quickly you lost. So if you had that 172, all of a sudden now, I mean, you waited all the way back down to 84, and now you're back up to 100. So as Bitcoin does break the 100K and starts moving up, that'll be big for MicroStrategy. But you got to realize, MicroStrategy just did spend a whole bunch more money on more Bitcoin. I don't know what the status is currently on their bonds, if they have another bond offering. So for those of you who don't know, one of the things that MicroStrategy has been doing lately to make money, they have been offering these bonds. So the way it works is they'll offer you a bond that it'll have a crazy price target on it. And if they reach that price target, they only have to pay you back the price. If they reach the price target, you get that. But if they don't reach the price target, you end up only getting the value of the bond. So you can't lose. So you're in a no lose situation, but they're in an all win situation pretty much, because they're using that to buy the Bitcoin. With the Bitcoin going up, they're making a bunch of profit. And if their stock goes up to that target, and they have to pay you that, it's fine. they're fine. They've actually made more on the Bitcoin that they purchased with these funding. So I think it's called convertible bonds, but it is actually really kind of cool. And that's kind of one of the things going on behind the scenes with MicroStrategy. It's like they found a way to, it's almost like they found a way to print infinite cash. It's, it's interesting. But there's so many plays right now on MicroStrategy, and I did add MSTY. Let me show you this one. To the 0 to 100K challenge. And we'll just go to the last year. So here we are. So this here is it's a synthetic covered call, meaning that they don't actually hold any, but they are writing options, basically naked puts and things like that. And then, you're getting this crazy movement. Now you'll see this massive drop here. So you might be thinking, oh yeah, MicroStrategy fell. So that's part of it too. But also, on the weekend, they paid out their dividend, and look at their yield, 116.40%. This is dangerous. No way around it. I feel like this isn't even sustainable. And I will tell you, I am afraid of this ETF. I'm afraid of it. But I did add it. because I'm going to play it. as long as they're still pulling this out, why not? Why not ride it? But I will watch it. And when Bitcoin has finished its run, and when we start to move towards a crypto winter, I will sell myself out of this as fast as I can. So I'm just going to see. I'm going to see, and you guys will get to see because it's in the challenge, what we can do with this. What we can do. I probably should have got in a little bit earlier. Paul has been bugging me about MicroStrategy and getting some exposure to it. But yeah, we're in that game right now. So we're going to see. We're going to see how that all turns out. And I'm okay with it. I'm okay with it, to be honest. All right. Paul says, I wouldn't touch MSTX 2X or MSTU 2X again. I got burned each time. If you owned MSTU on Tuesday, you would have lost 26% during regular hours. Fool me once, shame on you. Fool me twice, shame on me. That's what I'm saying. The 2X ones are dangerous. They're very, very dangerous because when they turn on you, like this is kind of, I will show you guys. Like the only real one that I will place from time to time is HOD, and this here is an oil. This is an inverse leveraged daily bear. So this is 2X. I'll pull up the last year, and you can basically see, I can tell you right now, oil was doing really well in that period because this moves the opposite direction to oil. And here's the thing, oil's falling, you're doing well. So, oh, excuse me. Oh boy, let's get some coffee in here. Woo. As you can see, when oil is doing well, this is going to fall. So here is how I would play this. I only use this for very short trades. So I would, if we were in a day where oil is just tanking, every geopolitical indicator is saying, yeah, oil's not going to do well the rest of the day, then sure, I'll jump in on this. I'll play it down. But, I will be paying attention. I'm not going to leave it alone. I won't leave it unattended. So, for example, if I was playing this and I was going to go have lunch, I'm getting out before I go have lunch. Because all it takes is once it starts to change direction on you, you can lose money fast. You can lose money very fast. So I always did short-term, little short things on this. And I'll tell you, it's stress city as you're doing it. Depending on the size, especially if you're doing like a larger trade, very, very dangerous. Very, very dangerous. So I always say stay away from it. Look at short-term trades if you are going to play with it. All right. Let's see. Michael says the CEO has bought over 60 million shares from under $1 to $1.45 and never sold a share on PED. Yeah. I mean, it may be. I mean, PED may be very good. And that's the thing I'm trying to... When I say that I'm leery of penny stocks, it has nothing to do with how well they're managed or how well they're not managed, because some of them are crap shows at the same time. It has to do with the fact that they just don't have that moat just to handle to handle things like black swan events or even parts of the economic cycle. Sometimes they don't do so well in that area. So I'm just cautious, very conservative when it comes to that. Let's see, Michael says, what happened to PGHL and why did it crash or fall over $100 today? I don't know, but let's take a look here. This sounds like a job for this one here. PGHL, let's pull this in. So this here is the Primaga Group Holdings. Let's add them up and take a gander and see what's going on here. Here we are down here. Oh, look at this. Yeah, you're right. This is a big drop. Big drop for sure. Let's see. It's a US Dell. It's not really telling me anything. Like, it's not giving me too much information here. Let me just take a look here. Yeah, the headlines aren't really telling me what caused this one to fall. But yeah, that's quite the drop. That's quite the drop. Because yeah, you were look up here. What? Wait a minute. Am I in the right? Am I in the right? You're saying it dropped $100. PGHL. That's interesting. Because I don't see that. I'm seeing $23 up here at this high, down to 130. But even still, that's a massive drop. That's a massive drop. I don't know if I'm on the right company. I don't know what you're saying about $100. I'm not sure. All right. Let's see here. Paul says, I am still ahead share-wise on MSTR, but would have been better not touching MSTR 2X ETFs. Still plus 14 extra shares. You're still winning the game. You're still winning the game. Let's see. They call the MSTR the infinite money glitch. There we go. Let's see. Yeah, MicroStrategy was 162 in July this year. Oh, that's crazy. And right now they're sitting at, let's take a look. Here they are. And in the post market, they're actually up a tiny bit. So they're sitting at $390.11. So, and you can see the other day, look at this. They were up here at $543. Wow. But yeah, it'll be interesting to see when they have their next little explosion. All right. Let's see. I don't understand what happened to PGHL to go up and fall so much, since I don't understand that I couldn't touch with fall and see no news. Yeah, exactly. I can't see anything at all to explain it. So that, to me, that would be you'd have to really dive deep into that. Of course, I can't do that live on the air, but that would be kind of what I would be looking at. Paul says, I started buying MicroStrategy in July this year. I went through my old transactions and found a canceled buy order December 28th, 2023. Would be super rich if I bought it in December 2023 at $67 a share. Oh, wow. Yeah, that would certainly be good. That would certainly be good. Larry says, show no affair, diamond hands. There we go. Jersky says, hello, I finally got here. Awesome, awesome. Good to see you, Jersky. Good to see you. Let's see. Larry says, blowing up your account 4 times teaches you many lessons. Absolutely. We learn when things go wrong. That's when we learn the most. So I've always said this, like, I don't mind things going horribly wrong, because I know I'm about to learn a whole bunch from it. On the other side of a disaster, I tend to be smarter. So I definitely like that. I think that is fantastic. All right. Oh, this coffee is good. This coffee is good. All right. Whew. All right. All right, there we go. I just wanted to get that out of the way. All right. Now, I just want to head over to Discord for a moment here. Okay, so the YouTube schedule, those of you, by the way, anybody here who has not been over to Discord or to the Facebook group page, that's where the schedule lives. So you get to come in here, and here we are. We're on this market close. We'll get rid of that. This way here, you kind of get an idea of what's coming up next. And as you can see here, November 29th, we got 2 things happening. The Members' Choice video, that's basically... It's kind of one of those FIQ ones. So it's basically, if you're 50 years or older and you're starting investing, what should you be looking at? What's going on? That's what this is all about. Sorry, yeah. And then we got a market close as well. Then here's our first this week, December 1st. So this week is going to be absolutely fun. It's going to be great because we have... it's the first Sunday of the month. That means free membership giveaway. So we're going to give away 10 memberships, maybe 11, who knows? We also open up the subscriber sponsored video. So if you have a company you want the deep dive treatment given to, that's going to be available to you. In addition to that, we're going to have a second little stream on December 1st. It won't be like a 2.5 hour stream, but it is going to be The first stream of, right down here at the bottom, you can sort of see this. Financial Blogmas, December 1st to December 24th. So that will be starting. So it's gonna be like a Vlogmas, but we're gonna throw something financial into it, because I'm not gonna just sort of show you, oh, here's what I eat for breakfast, guys. Spoiler alert, it's spoon-sized shredded wheat or shreddies, or I'm not gonna show you that. I'm gonna I'll pick a topic or something. We'll talk about it for a bit. They're not gonna be long. I honestly have no idea how long they're gonna be. I'm just gonna kind of go with the flow. But we will have that first one that's going to be coming out on the 1st. Then we'll have one on the 2nd, the 3rd. So every day from the 1st to the 24th, we're gonna have one of those. Now, I'm gonna drop you guys a link as well for this. Let me just grab you a fresh link. Edit, never expire. Even though I say never expire, sometimes they still expire. All right, I'm gonna drop this into chat. So here we go. Here is a link if anybody has not yet signed up over on the Discord. Feel free to do whatever you want in the Discord. The only rules really are, just be civil, be kind, respect everybody. Paul will love it. Paul's in the Discord. I think Paul lives in the Discord. So the more people we get over there talking, the more fun we have. But yeah, so the schedule is there. That's one of the places it lives. Also, there's little things like special requests. You can come in here, and if you have a video idea and you're like, I need this done, come on in, throw it in. It might get done. I can't guarantee. Like, if you come in and give me a really bad idea, I may not do it. But chances are I probably will, because I never really think there's bad ideas. But, yeah. So throw things in here. Utilize it. We also have a Facebook group. Facebook group, you simply just, there's a link below. Or you can, of course, just do a search for Mountain Finance there. It's a private group, so you apply, and then I'll let you in, unless your profile says I'm an SEO agent from Indonesia, and I'm looking to help people set up SEO. I probably will decline you, because I do have a lot of those SEO people who try to sneak into the group so that they can try to sell me their services. I'm not going to buy. I don't need somebody to come in and say, I can fix your channel and double your viewers in a week because I know all the secret tags. It's like, yeah, okay, right, sure. We'll go with that. All right, let's see here. Double A is saying, not me, and where can I get that? I think that where can I get that was because of, to the Discord. So that's why I dropped the link, actually. Let's see. It does say $105.71 down on PGHL, but in after hours at 184 up from 1.65. That's really weird, Michael. I'm not sure why it would say that. That's a huge amount of money. So yeah, that has me a little bit baffled. I'm not sure why you're seeing that. 9 says, I just stick with being long oil ETFs like ENCC. I don't really day trade at all. Yeah, there's no need to. And quite honestly, most people who, whoops, I'm just moving up, sliding over a bit. I was looking, I'm starting to lean towards one side of the circle. Yeah, most people who day trade, a lot of people lose. It's so easy to lose your shirt and everything else with that. So there's absolutely no concern with that. What are your thoughts on ATD.TO? One of my favorite stocks. It is one of my favorites. So Alimentation Couche-Tard. Here's the interesting thing. There is stuff in the news. Now, I haven't heard an update to it yet, but I did hear that the family behind 7 and I, or I and 7, are looking to do a counter proposal to them. So we have to sort of see how that's going to go. Now, if it goes well and Alimentation Couche-Tard is going to take over 7-Eleven, they are going to need to pull together a lot of cash. So that does mean Unfortunately, that means they're going to be diluting shares if that happens. What does that mean? That means their share price will go down. So if it looks like they're accepting this deal and you're holding Alimentation Couche-Tard, I would, personally, I can't tell you to do it. I can't tell you. But what I would do is I would probably move those funds out of ATD. Utilize them somewhere else. Wait until all of the dilution is done. Yeah, actually, I mean, if it's in your TFSA, you have to wait 30 days before you can buy back anyway. Give it a month, give it more maybe. Once they've sort of bottomed out wherever they're going to bottom out at that point, I'm all in. I'm back in. I don't want to say all in. I don't want to make it sound like I'm going to move everything I have into ATD, but no, I'll be back in. I've already done the selling, because I did have them in the challenge, and I sold out when I saw the beginnings of all this beginning to happen. Doesn't mean that you guys should be following what I'm doing. I'm just telling you guys what I did. Always do your own due diligence, guys. Always do that, because keep in mind, it's your money, right? If you do something that I did and I made a dumbass move, maybe I only made a dumbass move with a little bit of money, and then you went and followed me and did the same move with a whole big amount of money. You got to always take responsibility for your money. And even if I give you really good arguments for why something is good, you want to look at it yourself. You want to make sure that you feel that it's good. Don't do something because I feel that it's good. Because, I make mistakes. It'll happen. And I'm sure I'll make more mistakes. So just something to keep in mind. And that doesn't I'm not saying this just about myself. All YouTubers on this, any financial YouTuber, never listen to any of them. Listen to them, watch them, engage with them. But when it comes down to the nitty gritty and your money, you need to make up your mind. Don't invest in something because you heard me talking about it, or, maybe Brandon Beavis was talking about it, or maybe you heard Graham Stephan going on about it. Just make up your own mind. Do your own due diligence, because it is your money. That's why I always say it's your hard-earned money. So you want to treat it with that level of respect. Just putting that out there. All right, Michael says, let's see, PGHL moving up and now 199, but I don't understand and been looking at STLA, which is good fundamentals and markets at these levels. You must be careful. Yeah, you always have to be careful. Being careful is definitely a huge, huge thing. Michael says, do you like any of the Bitcoin miners? And they look like having problems making a profit when Bitcoin at highs. And I don't understand with Bitcoin's high why these miners are making a loss now. Okay, it's actually very easy to think about. When you look at the miners, what ended up happening is a lot of the miners before the halving were selling off some of their Bitcoin to make profits, things like that, or to meet bills in many cases. The last crypto winter was pretty hard on a lot of them. As a result, they did grow towards the halving, but once you hit that halving, all of a sudden, all of their revenue was cut in half. Completely cut in half. So when you cut somebody's revenue in half, it's not an easy fix. Now, some miners have been doing different things. Like, for example, some miners have been leasing out some of their machines to AI to try to get a little bit of extra revenue in. But the problem is, for them to get back to where they were, Bitcoin pretty much has to have doubled in price at that point. We haven't quite got there yet. We're close. We're pretty darn close. So, that's one of the issues with miners. Now, they will recover, absolutely, but they're not that play. Like, I think some people probably used miners as their play, thinking, okay, as Bitcoin's going up, let's jump into some miners. They're going to make some money, but they're really not doing it as well. Like, your better plays are, well, one, Bitcoin itself. So the Bitcoin ETFs, I think they all moved pretty darn good as well. The other play, of course, is Well, MicroStrategy has been doing really, really good. Now I know that I think a lot of people have been looking at I think it's Mara who's been putting Solana on their balance sheet. A lot of people are looking at that and thinking, okay, they're doing what MicroStrategy did, but for Solana. And that may be a brilliant move. It may very well be a brilliant move down the road, but it's not yet. It's, Solana's popular, and I am bullish on Solana long term because, Solana is basically offering the same platform to build things on that Ethereum does, but with much lower fees. That's one of the big hindering blocks of Ethereum is you have these very high gas fees, and that's not great. That's not great. But, Mara is taking advantage of this, and they're looking at doing this, and we'll have to see how it works out. And as Bitcoin gets towards its top, what you normally see is after Bitcoin runs, you normally then get a run in the altcoins, and that could be Solana's moment. We'll have to watch and see, but and I'll keep my eyes on Mara because I think that's a really interesting strategy to see if they can capture lightning in a bottle, like the way that MicroStrategy did. So definitely something to think about. All right. AA says, I have major holdings in Alimentation Couche-Tard, so I am kind of worried. This stock has been good to me. Yeah, it is a great stock. Like, that's what I am saying. I'm saying I love the stock. Now, here's the thing. Let's go to... just give me a second here. Let me pull up a whiteboard. I want the whiteboard. Here we go. All right. And I need the draw. All right. So keep in mind, like right now, and I don't even know how many they have, but we're just going to use some easy numbers. All right. So let's say they have 1,000 outstanding shares, meaning that in total, there's 1,000 shares of Alimentation Couche-Tard. All right, so if that were their number, what happens is when you do dilution, so dilution, we'll put it here, is you're going to take that 1,000 shares, and let's just say, for example, you need to come up with a certain amount, but let's say you create another 100 shares of that. So if these 1,000 shares, let's say they were worth $1 each. So you got $1 for 1,000. All of a sudden now you have 1,100. So that 1,100 means that you're no longer worth 1,000. Basically, it's going to be worth, if you take 1,000. See, if you took up here 1,000 divided by 1,000, that gives you the 1. You would have to take that 1,000. You'd have to divide it by 1,100. And, of course, I don't want to do math in my head. But basically... if you're dividing it, you can get rid of those two. Bang, bang, bang. It's like 10 over 11. So it's going to be worth something silly like, 0.9. I don't know if anybody... Oh, I thought so. As soon as I saw... It was Patricia. I saw it pop up. But let's just say, for example, I'm not doing the math, guys. I'm just picking a number. Okay? But that's kind of what you're going to see. Is all of a sudden... that share price then goes down. Now, in the case of Alimentation Couche-Tard, they're going to need a lot of money. So, their share price, I don't know what it is at right now, but it's going to go down. It is going to go down. Well, actually, let's just take a quick gander. We'll go to the heat map. Let's go to the real heat map. So Alimentation Couche-Tard is sitting at what? 82.47. All right, perfect. So in this case here, where we might have 82.47, now here's the thing. I don't know how many shares they're going to be printing, but we could get into a situation where when you have dilution, we could end up with, let's just say we end up at 70.12. That's not an unreasonable expectation. Now, after they bought 7-Eleven, this price will go back up. They're going to be the biggest convenience store, in the world. So there's no reason why all of a sudden on the other side of this, you don't end up higher. So 86.33. But here's that thing. So here's the two options that you have. You could hold steady at 84.27, 82.47. You can watch it go down, but it's in your thing, and you're just adding. You're adding. That's fine. So what you're doing is you're averaging down. So maybe you've got an adjusted cost base. Let's just say you end up averaging it down to $80 because you bought a bit down here. That's fine. All of a sudden, after some time, and I can't tell you how long it will take that for this to happen. It might be a year. Maybe it's a year. Let's just say. We'll say for argument's sake, it's a year. Well, in 1 year, you are back in the green again. So that's the whole thing. So if you're in this situation that, you got a couple of options. Now, I tend to trade. So, and that's kind of what I did with this. Like, I'm thinking with the alimentation Kush chart, it's like, I'll get out. I'll get back in down here, and then, I'll make a bigger profit going from 70 to 86, or, opposed to from going to 82 to 86 over that year. I'll make a bigger profit that way. But now, here's the thing. If, let's say you're thinking, well, okay, I know there's going to be dilution. And they actually said there would be dilution. I'm not pulling that out of my butt. Alimentation's Kush chart said that's one of the methods they're going to use to finance this is through dilution. So we know this is going to happen. But if you're that type that says, you know what, I got a lot of them, I just don't want to take the chance. What if this all falls apart, and it goes, instead of the dilution, it just never happens. And let's say the deal falls apart at the last minute. I've sold this, and and it still goes up. And at that point, you might be thinking that could happen, and maybe that does happen. Maybe that happens. If that happens, you've kind of at this point where you sold it, you don't get that opportunity. You might then you'll know, like, what like if I find out, let's say right here that, oh yeah, it's not going to happen, I'll probably buy back in here. Maybe that's going to be let's say 83.97. And yeah, I've lost a tiny bit of profit, but I'm still going to make profit off of ATDD, or ATD. So, we're slowly turning this into a very complicated looking picture, but it's just something to keep in mind. I don't think that you have to really worry a lot. I just mentioned, when, because we got a good mix here. We got a lot of people who are doing it the right way. They're long-term, they're dollar cost averaging, and we also got a good amount of traders who come in here too. So this is how I would do it as a trader. All right, so that's my trader methodology on here. If I was a long-term, so LT investor, if I was looking at it from this perspective, and I got those shares at 82.47. Well, at that point, I'm not going to sell. Why would I? I'm just going to, when it goes down, so what did we say? It went down to 70.12. I'm just simply DCAing down there as well. And then on the other side of this, when we're up at, I'm just going to put the 86. I'm not going to put the cents. On the other side of that, fine. I've bought here. I've bought here. I've bought here. I've bought here. I bought here. I'm looking fine. I'm looking absolutely fine. And this here is, the long-term investment mindset. Long-term makes more money. It tends to make more money. This here, if you play it right, you're going to make some good money. Yes. But when you look at it long-term, it's probably not even as big as, this is still the safest way to go as a long-term investor. So keep that in mind, AA. Just because, it makes sense to go through all of this banana fuddling mess here, because it makes sense to do that. It doesn't mean that it's the best way to go. If you're a long-term trader, this here is your best way to go. See that nice little curve? And here, I'll even give you a couple of eyes and a nose. And now it's a happy face. So you're good. You're good. All right. Now, Patricia's in the house and she says, thumbs up, people. Ooh, she's moving in on Mary's territory. But yeah, I'm going to have a sip here. We're at 30 likes, guys. 32. Let's get us to 32. That's what I'd like to see. All right. All right. And AA says, in that case, they will give more number of shares to existing holders to match the current price. No, that's how share dilution goes. They basically print more shares. It's the same idea as, during the pandemic, they printed a whole bunch of money. It's the same thing. And when they did that, your dollar value, the value of your dollar went down. That's why prices went up. That's what inflation is. That's the same thing with a company. So when a company does that, it produces cash for them, but it doesn't produce cash for the shareholders. It's one of those things that shareholders hate. Now, and just we're here, while we're here, so that's dilution. All right, there's another thing that they do. You've probably heard about this, share buybacks, so SBB. So with a share buyback, what they do is, let's say Alimentation Couche-Tard has that 1,100 from that example, and they want to do a share buyback. Well, maybe they buy back 100. So they buy 100 shares from regular people who are holding it, but they never sell them again. They basically tear them up. They're gone. They're gone. And when they do that, all of a sudden, they now only have 1,000 shares. So with that share buyback, what that does is then those 1,000 shares, they are worth more. So the price of it will go up. So in that example where we had 0.98, well, if you do this, and we're sort of removing all normal market movement on this, that 98 is going to go back up to $1. So they'll now be $1 a share from the 98. That's just kind of the whole exact opposite. That's one of the reasons. Let me come back here for a second here. Let me show you two things here. I'm going to show you two things on one chart. We're going to go to Air Canada, and we're going to go over to their 10-year chart. Okay, so Air Canada was doing fine, had a lot of healthy growth. Along came the pandemic. So as you can see, they fell big time. Now, what Air Canada did is, to survive, they had to dilute their shares, and they did a whole bunch of share dilution. So because they diluted their shares, it reduced the value, meaning that this $51, no chance we're getting there. No chance. Not for a long time, at least. And that's exactly what happened. So they were able to get back to, like, at one point here, they almost made it to $30, but, they just weren't able to do it. Now, here comes along to now, and they, all of a sudden, they had a good earnings. They are benefiting from the rate cuts coming down because they have a lot of debt, and they announced that they were going to buy back 10% of their shares over the next year. So from November of November of this year to November of next year. That caused this massive spike. So right now they're sitting at $24.63. And as they do buy back those shares, that's going to be this nice little catalyst to keep this climbing a little bit. It's going to be, there's other factors as well that are going to move that price around. But you have to sort of look at what's going on. All right. And then, ATD, by the way, we'll pull them back up since we've been talking about them. As you guys can see, today they did have a pretty good jump. They went up. Let's go back to their 6 months. So if you look here, yeah, that's a nice little leap up here today. So once, because they haven't, I want to be clear, they have not diluted their shares yet. They're only going to do it if this deal goes through. It's part of the way that they're going to finance that deal. but it will be good for them long term, just to keep that in mind. All right. All right, Bismarcky says, good afternoon. Happy Wednesday. I smashed the like button. Yes, we got our 32. We're at 34. Now I'm greedy, guys. I want 35. I'm greedy. Yeah. Tom said, ATD had a nice jump today. Oh, yeah, absolutely. Absolutely. Jersky says, how much cash and percentage do you have on hand ready to reinvent? Oh, that's a good question. That's a good question. Let me take a look. It's not high yet, but I am building it as we move towards a bear market. And I think I have lots of time, by the way, guys. Currently, right now, my cash holdings sit around 1.83%. So it's low. It's low. But I do foresee before the end of 2025, I think we have a good chance before the end of 2025 of seeing a bear market. I'll reevaluate that as we move through 2025, but I am planning to up my cash position. Probably by the time we do slip into a bear market, I'd like to see myself probably a good healthy anywhere from 5, somewhere between 5 and 10. I don't know. It really depends on the market, but right now I'm not touching that. Even when I see good buy the dip opportunities, I'm just going to sit back and just let that build. It's kind of what Warren Buffett has been doing. When you think about Warren Buffett, you keep hearing about how they have record amounts of cash on hand, and that's fine. That's absolutely fine. It's because that's the way you play the game, right? Let's go back. Let's go back once again to the whiteboard. Let's pull this off here. All right. So here is I'm gonna do just a straight line. All right. All right, guys. So what this here is I'm gonna change colors here. All right. This is a bull market. This is a bull market, and obviously these going down are your bear markets. All right, so this is kind of the way the economic the economic cycle goes. We're not going to worry about recessions and depressions. We're just looking at the market. So you will have a bear market that will run for a while, and I'm going to change this just as purple just to make it. There we go. To make it something different. There we go. So one of the smart ways is to sort of look at, we don't know that date of when this is going to happen, because in here you will get little drops like this. So, and if the second the market starts to go down a little bit, you might be like, oh my God, we're in the bear market. And just look at YouTube. You'll hear people yelling about it on YouTube. We're in the bear market. It's all over. Sell your dogs, sell your cats. It's done. That happens, but I wouldn't worry about it. I wouldn't worry too much about it. But here's what's smart to do. What is smart to do is, when that bull market has begun, you're probably sitting at about a 0%. Or maybe you have a little more, but you don't have a lot of money, cash, because you have spent it during the last bear market. As you start moving through, maybe up around here, maybe you have 5%, or it really depends. Some people get really into this. If you're really lucky, imagine if you have 10% cash here, and bang, here we go. We're going down. Now, you don't know when this is going to stop. So, once again, it might be like you've got some great buy the dip opportunities here. So, maybe at this point, you have 8%. Maybe down here, you're at 4%. And it might still be going back up. But you may not realize yet that you're heading into a bear market. And let's say down around here, you finally have sold everything. You're at that 0% again. Well, guess what? Now you're in a bull market and you're starting to add again. So maybe here you're at 3%. and then maybe 6%. So it's kind of this way that it happens. So when you think about somebody like Warren Buffett, a 10% for Warren Buffett is a lot of money. For, Berkshire Hathaway, it's a crazy amount. So it's all relative. But that's one of those ways when it comes to a cash position is, build it. Slowly build it in the bull market. Spend it in the bear market. Build, spend. So instead of bull bear, it's save, sell. Or you could say, just save, sell, or save, spend. That's kind of that whole idea. Like, that's the way you're taking advantage of that market, and you're pulling it, and you're pulling all of those finances together in a way that works for you. Now, once again, you guys know I mentioned this. That's kind of the trader. That's kind of the trader strategy. Now you can still do this though. I think that this one you can still do as a. I'm getting good at making letters now with the mouse. You can still do this one with a in a DCA. So some people with a DCA, what they may do is they may sort of do a hybrid where they are doing their normal DCAing, but they keep a certain amount of cash that's flowing in this kind of way. You can DCA with everything else, and then maybe you're doing the buy the dip on the side type thing. And I think a lot of people do that. But I will say there's nothing wrong if you want to just DCA. Absolutely nothing wrong with that, and you're going to make a ton of money. You're going to make a ton of money. So, there's nothing wrong with that at all. And for new investors, I will say don't even think about this yet. Don't worry so much. Just do your DCAing until you've got a feel for the market, till you understand what's going on. And you can understand how a bear market works opposed to how a bull market works. It is a learning curve. It's a learning curve. Like right now, a lot of new investors. So any of you who are new, brand new, I can tell you right now, you may never have been in the bear market yet. Maybe, you missed this bear market, and right now we're up here on this curve somewhere going up. Maybe you have never seen a bear market before. And, if that happens, you're going to get that bear market the first time, and you're probably going to be like, holy banana bread, what do I do? I've never seen this happen. Why is it so red? But you'll get used to it. You'll get used to it. It's part of the normal thing. And that's the thing. You make your money because you notice here, look, as your cash is going down, you're buying cheaper stocks that are all of a sudden going to be worth a lot more up here as you're building up your cash. So when you're buying stocks up here, as you're approaching these all-time highs, you're not going to make a lot of money on them until after the next bear market, because it's kind of like you kind of have to do a skip over to here before they're profitable. But, if you're doing that through a dollar cost average, who cares, right? Because you're also going to be buying through the dollar cost average. You're buying here, you're probably buying here and here. When you average it all out, you're back in the green pretty darn fast. So it's just kind of that whole idea of the way the financial markets work. All right. How far behind am I? Actually, Missy has made it. Hello, I made it. Hello, Missy. Good to see you. All right, zero cash available. Let's see. I learned a few new things today, so thank you. You're welcome. Traffic. Good old traffic. Vic. Vic and traffic. It's funny. It's not, but it's funny. All right. Avanit is in the building with a hi, all. Larry says, I just do separate accounts with different strategies. Yeah, absolutely. There's nothing wrong with that. Because, guys, I will point this out here. You can set up, like even with your TFSA, you could have more than one TFSA. You can have one at Wealth Simple. You can have one at National Bank, or, you can have one over at Investor Line or wherever it is that you're banking. But you got to pay attention to what you're doing then, because you don't get two contribution rooms. It's just one contribution room. And if you have two TFSAs, you've got to add them up to know where you're at. So you do have to do a little bit more math when you do that. But you can do that. You can have two TFSAs. You can have two RRSPs. And some people will do that. Like some people, for example, let's say if you're a bank, does TFSA matching. RRSP matching. Maybe they have it and they have an account set up that they do it in for you. And that's sort of held while you're at that employment. And then you might have your RRSP in another spot as well. So that's one area where you may have it split up. But you have to keep in mind, you don't get extra contribution room, and you do have to do a bit more math when you are splitting it up that way. But it can make sense. It can absolutely make sense for sure. All right. Vineet says, even if there is a bear market, there are still sectors that are going to be up. Yeah, absolutely. Because keep in mind, if we look at the last bear market, the tech sector actually entered the bear market first. So as tech was falling, everything else was still business as usual. And people were just sort of like going, what's going on with tech? Not realizing that tech was the canary in the coal mine this time. And then everything fell. But yeah, there will be things. Like there are, for example, there's like, I call them the recession-proof stocks that do well no matter what the market is doing. Yeah, and you'll look like, I think, let's take a gander here for a second. Let's see here. We'll look at Dollarama. All right. So here's Dollarama, and this is what I call a recession-proof stock. So we're going to go to their 5 years. Look at this and tell me, can you see the bear market? Can you see it? I will tell you, right about in here is the bear market. And what are they doing? Well, they had a little bump, but for the most part going up because they're recession proof. You know, even when the market's bad, when the economy is bad, people are still using their services. So they, this is a company that in the bear market, you're not getting those corrections. So, this is a company, just a straight dollar cost average is usually the way to go. And you'll notice a lot of companies too, like for example, Loblaws. Let's go to Loblaws. And let's go to that 5 year. So right here, in this area here is actually this area right here is the bear market. And as you can see, they were going up, slowing down a little bit. They had a little bit of a retracement in there, but at that point, we were kind of already on our way out of the bear market. And then they went crazy up. But, it's just the way it all works. But you're right. Vinita's absolutely right. All right. Andrew says, I've only seen the bear market last year. Okay, so there we go. So looks like Andrew saw the tail end of the bear market. But, it'll happen. And I'll still be here during the next bear market. And we'll still be doing this. And we'll be exploring all of this fun stuff. So no worries there. Larry says, the first few years trading, I did terrible. 16 years later, and I'm good at it. Yeah, there's a learning curve. There is a learning curve. And that's one of the things I will tell. If you come to me and say, I'm brand new, I'm starting to invest right now, what do I invest in? I will tell you one thing. I will tell this to anybody. I will say, blue chip ETFs. Get yourself, maybe 3 or 4 good blue chip ETFs, dollar cost average into them, and just keep doing that. And while you're doing that, it's time to learn about the market. It's time to learn about companies. It's time to learn about fundamentals. It's time to learn about how to pick a good stock. Don't even touch, like I would say, don't even touch a company stock, while you're in this phase. Just pile up with those ETFs, get into the learning, whether it be, things, you use this channel if you want. There's lots of different things. There's great books out there as well. And I actually have to reset up my affiliate thing with Amazon so I can start putting some books on the in the extra info because I had them there before. Yeah, it's just one of those things that I think is that's kind of the advice that I give. And interestingly enough, the video that's dropping on Friday, channel members will be able to see it tomorrow, is all about what to do if you're like over 50 and you're a brand new investor, and it's like, what's my roadmap? It's like from I know nothing to getting those first, as I mentioned, ETFs. So that's coming out on, as I said, Friday. That's actually the channel members' choice. They voted for that. So, it's kind of interesting. I've never done really, this almost feels like a beginner video, but I think even if you're not a beginner, there's probably still some value, because sometimes it's nice to go in and just look at the fundamentals again. Not as in the fundamentals of fundamental analysis, but just the fundamentals of, of getting yourself all set up and fun like that. So always a good thing. Let's see. Vineet says, I'm thinking to close one of my TFSA accounts. Yeah, and you can do that too. I mean, you can close a TFSA account if you've got, just make sure if you're closing it that you, first of all, find out what your broker does with dividends, in case there's any dividends still yet to come in. Just a few little things like that. Like what I'm going to do is if I'm going to close a TFSA account, I will probably make, let's say I'm moving everything from one TFSA to another. I'll probably initiate that transfer. Then I will wait, make sure that there's absolutely nothing still coming in before I close it. And if there was like one dividend that comes in, like let's say 25 cents or $1 or something, I'll just transfer that. I'll transfer that out, because I'll get that $1 in contribution room back on January 1st, so it's not a big issue. Now, let's see. Vineet says they do say day trading, I guess they do say trading takes a few years. Yeah, absolutely. All right. We have William in the house. Hello, William. Good to see you. All right. AA says, speaking of Dollarama, do you think the stock is overvalued? Yeah, I don't think so. I'll tell you why. This is a company that has been expanding. They're constantly pushing the boundary, and right now, even though interest rates are coming down, people are still not having that same dollar value. The cost of living has gone up much more than inflation, I think, and I think that's going to it's going to do well for Dollarama, companies like Dollarama, because I think there's going to be a lot of people that just can't go back to their old buying styles, even with interest rates down. Because you got to realize, while interest rates were up, what was happening? A lot of people were stacking debt. So that's, interest rates are down, but the amount of debt's not down. You still have a big ton of debt that you have to deal with. So I do think that all of these things are going to work in Dollarama's favor. So I see Dollarama, I think when you look at this really steep rise, I think we'll get a less steepness. Like I think it won't keep moving at that speed, but I do think it will continue to go up. Like $200 Dollarama, I don't think we'll hit it in 2025, but I do think we'll be a lot closer as we get as we do this again next year around this time. So just something to keep in mind. All right, guys, we're almost at the end. If you got any of your last minute questions, now's probably a good time. You can post it after the stream's over, but you're probably not going to get an answer. Just being honest with that. You're just not going to get an answer. Well, if you do it as a comment, like if you watch this in the after show and you put in a question in the comments, I will answer you. I do answer. I try to. By the way, guys, I will answer every comment. So if you leave a comment and I don't answer, that probably means YouTube deleted your comment, because I do answer everything. But sometimes YouTube will come in, and it can be something as simple as, let's say you asked me a question about alimentation to Couche-Tard and you put atd.to. YouTube might look at that and say, oh, that's a web address. You're not allowed to leave a web address, and it deletes it. Sometimes it lets me know that it deleted it. Other times it just doesn't. So be careful. If you want to put, quite literally, if you put ATD, I know what you're talking about. Let's say, for example, there was an ATD US stock, and I don't know what ATD on the US would be. Well, let's find out. We have this thing here. I'm kind of curious now. ATD. No, there isn't a US version, but excuse me. If there was a US version, you could always just put ATD and put in brackets like US, something like that, and I'll know it's the US version. And that way there, I won't give you a whole big rambling back on the Canadian stock if you're asking me about something on the US. I always assume it's Canadian first because it's, we're a Canadian channel. But about 10% of you guys are Americans. So I always keep that in mind. So sometimes I have been known to give a big wrong rambling on a Canadian stock and then to find out that it's like, I meant the US one. Okay. So, that's always fun, always fun. All right. Let's see here. Do you think the banks will get hit again, the bear market? Here's the thing. I'll tell you right now. We have coming up, we've got all the banks are going to be dropping their earnings. I think it's next week. So I'm actually expecting these earnings to not be as good as some of the previous ones. I think they're going to be a little bit worse because they are starting to get that wave of, the wave of mortgage renewals are coming in. So I believe right now outstanding into 2025 is about 25%, depending on the bank. Some banks may have more than others. So I think we're going to see a little bit of that. As we get, of course, into a bear market, so let's say, for example, the bear market comes in the middle of the summer next year. It's going to hurt the banks. The banks are going to come down. They're going to go down. No doubt about it. How far? It depends. It depends. Like usually a bear market, you're usually looking at about a 25% drop. It can be more, of course. So I'm not going to say that they're going to drop 25%. We'll have to sort of see how they're looking on the other side of the mortgage renewal. How rough this is all going to be on them. Now, the rate cuts, I think, are helping. And that's a good thing. So, we are expecting, of course, December 11th, another rate cut. Right now, the odds are 25 basis points because inflation seems to have punched its head up a little bit. So we'll have to sort of see how that goes. But, we have to sort of see. We'll have to see how this is all going to look. I can't really give you an idea of exactly how much they're going to go down, but they will go down. They will absolutely go down. All right. Tom says, what was the name of the royalties holdings you use and how is it taxed? Oh boy, I have a whole bunch of royalty stocks, Tom. That's not helping me. Most of the royalty stocks are usually fine. They're typically, they're typically depending on the royalty company, but most of them, take for example, let me see, Life, LIF, which is what is that? The Labrador Iron Ore. So LIF right here. Oops, it helps if I only put one L. LIF, Labrador Iron Ore Corporation. So in a case like this, these dividends are they're going to be Canadian eligible. They're not going to be, I don't have any real issues with the dividends coming from these. When you're looking at companies that you do have to be wary of the dividends, one is REITs. So anytime you have a REIT, for example, it's all of their dividends are 100% taxable income. You don't get, you don't have any kind of, you don't even have, you don't have Canadian eligible dividends when it comes to a Canadian REIT because they're not paying any tax on those profits that they're passing to you. So that's kind of the reason that you get that with them. But for the most part, I think most royalty stocks, and I'd need to know the exact one that you're thinking about. I think most of them are pretty standard. Like you take, here's another one. Let's go to Pizza Royalty. So PZA is Pizza Royalty. And this would be considered Canadian eligible. These are just typical standard, now they are high dividends, like 7.003, but you also have to keep in mind too, let's go back here. They're still, let's actually go back to 5 years. Actually, they're not doing that bad anymore. I was thinking that they were still down a little bit, but not that much. But they do tend to have pretty high dividends. But part of it is that, okay. I looked ahead. So Tom is talking about a DIV. All right, so this here is Diversified Royalty Corporation. All right, and this is a nice little stock. I do put my spare cash into them. They have a nice dividend. Their dividend is sitting at 8.388%. But once again, what they hold royalties for are Canadian companies, like Jack Astor's, Mr. Lube, Air Miles. So they hold a bunch of these Canadian ones, but everything about it is Canadian. So these would be considered Canadian eligible. However, when you are looking at something this high, like 8.3, to me that's a TFSA stock, if I ever saw one, because even with eligible dividends, you're still paying taxes on it. So I try my best that anything that's going to go in a non-registered account. So an example in my personal, I'm looking for the lower dividends. I'm looking for the higher growth stocks for that. Because it just makes sense. I don't want to be paying a whole bunch on that. All right, now. All right. Oh, I missed Larry here. Larry said the newbies that copied me from when I was at Tesla are still holding FNGU 3X Bull ETF. It holds CrowdStrike, Broadcom, Meta, Apple, Google, NVIDIA, Microsoft, Amazon, Netflix. $43 to $490. Oh, wow. I sold at $190. Yeah. I mean, and this is the thing. I mean, if you're holding a bull ETF, so if you guys look at this like a 3X bull, you got to be disciplined, right? If you're very confident in the stocks that you're holding. So in this case here, this is holding a whole bunch of tech. And tech is good. But here is that thing, right? I don't know if I have this on here. Let me see if I can have it, because it'd be great to show you the actual example here. FNGU. Oh, here it is. Yeah, it is the Microsectors FANG Index. All right. So yeah, 3X leveraged. All right, but what I want to show you guys, hopefully, or maybe not. All right, maybe there's a second one for this. Let me just take a look here again. FNGU, because I want to actually see the chart. I always grab that other one that doesn't work. Okay, this one works. Yeah, and this is the right one. Look at the price there, 400. All right, let's go to the, actually, I can show you on the 3-year. All right, so right here, this here is December of 2021. That is when the bear market for tech began. The S&P followed a little bit later, but look at this. You can see you were sitting at about $384, and bang, 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 at the bottom, all said and done, you got $41. That's crazy loss. But let me put this out there. If you're playing a stock like this, number one, if you could get in at this point, holy banana bread, you're in for a ride. But if you do get in at something like this and this happens, here's the thing. And this is the thing. You got a couple of options. One, you're going to take a crazy loss. I mean, you're going to have so much tax loss harvesting, it's going to be crazy. Or these are the FANG stocks. They're going back up. You know it. You don't know when, but they are. And, if all of a sudden at this point you're like, okay, well, let's hold off and wait. Next thing you know, you're at $80. Next thing you know, you're at $196. Next thing you know, you're up at $329. Next thing you know, holy banana bread, up here at $544. At that point, if that ride like aged you 20 years, yeah, you're going to jump out. You want to jump out somewhere up here. But, and keep in mind, if this happens again, 494, maybe we won't go down to 41, but maybe we'll go to 50. Maybe we'll go to 80. Maybe we'll go to 70. You got to be prepared for that in a situation like this because, and that's one of the reasons that I say, like, this is stressful. Imagine, because, depending on how many stock you have, like if you've got like 100 of these things at like 375, you're looking at $37,000 that all of a sudden got turned to $4,000. That's a serious loss, folks, a serious loss. But this is where, if you ever want a superpower, you want it to be diamond hands because, you'll get out of this situation. You'll get your money back. But what happens, though, and this is the sad truth, is that some people who bought up here and ended up getting screwed as it was coming down, sometimes that finance or that money, they don't have a choice. They need it. Or it's tied everything up and they pretty much just brought everything to a standstill. So sometimes you do get a situation where you have no choice. You have to take the loss. And that's always never good. Or imagine if you did this and you were using a margin account and your margin got called. Oh boy. Yeah. So you got to be really, really, really careful on anything like this. FNGU. That's the thing. It's a 3x leverage. You got to be careful. You have got to be careful. There's no way ands, ifs, or rands about it because it can wreck you. And if you do have the luxury of being able to stay in after something like that, and you have 100%, I would say 110% confidence in them stocks, you can get out of it. But I'll tell you, it takes a strong emotional investor to, not cry their pants, not pee their pants and run away and ask mommy to put you in an investing school because you made a big mistake. Yeah, it's not good. It's not good. Whew. But thank you for that one, Larry. That was that gave me a nice little fun place to go. Let me see here. Andrew says, I'm hoping to sell the bear resistant stocks and buy cyclical stocks in a bear or a recession. Okay, fair enough. And that makes sense, right? If you've got bear resistant stocks and when you go into that recession and they're still worth their value in gold, that's not a bad thing, right? Andrew sells them. He's got the cash. Then he puts it in the stocks that did plummet, like some of the tech stocks, for example, rides them back up, moves it over to the resistance. That's not a bad strategy, Andrew. Not a bad strategy at all. Just make sure, of course, that, make sure that you choose the right stocks. That's the big thing there. Paul says, cover call on Friday. What if MSTR temporarily goes above 430 and the other side doesn't exercise the option and it actually closes under 430? Does it still get called away? It depends on whether they exercise, right? If it goes over 430 and they don't exercise, then basically if the option is expiring at that time, it becomes null and void. So, but chances are if somebody does have a significant call like that, they might actually go after it unless, and here's that thing. Let's say you're playing it and you're looking at what they're doing and you're thinking, oh my God, right now, the way they've been going, they're probably going to drop back down. I can probably get it at a better price. They might, in a case like that, not exercise it and just let it expire. But, you got to see. Let's see. Alberto is sorry, I'm late. Yeah, we're at the last moment. Let's see. Oh, here's even more to that story. So they dropped to $9 and then did a reverse split to those 40s. Oh boy. Yeah, that's pretty cool. Let's see. I think the other side's break even was 433. So then, yeah, it's interesting. Maybe they will leave it be then. That would be interesting. You could be in for an interesting Friday, Paul. I mean, I'll be here, and so will the stream. We actually have another market close on Friday. So, what are your thoughts on WSP.P.TO? All right, WSP. Let's take a gander here. Let's see, WSP Global. Bang. All right. Let's take a look here. All right, so there's that bear market, and they've been doing really well since the end of that bear market. So you gotta like that. They've got healthy EPS, really good. Small dividend. All right, so they're definitely growth here. So they do provide engineering and design services in transportation and infrastructure. So when you look at what they do, this is a sector that is on the move. There's a lot of stress to repair infrastructure. I think we just had, actually, about 3 weeks ago, we had a story on This Week about some of the mess in Canadian infrastructure between roads and water. But yeah, these are sectors, these are areas, and with all of the pressure to build, I think there's going to be a big demand. So that's good. There's a demand for what they do. They've got a good cash flow going. Let's take a look at their debt. I'm kind of curious to see what they've got going on there. Their debt, not that bad. They've got an 82% debt to equity ratio. Their return on assets, 10.94. Return on assets, 3.75. So not that bad. Not that bad, actually. Yeah, this is a solid, I think this is a solid company. I've got no complaints. No complaints. How do you have so much energy for this long stream? Yeah, we've actually, oh my God, this is longer than we normally go. I think part of it is, this week was shorter than normal because my the coughing and everything, it did me in. This one here, yeah, we're into overtime. We're into overtime. So move from WSP to like bank stocks with the high divvies. Okay, interesting. ChatGPT has the answers. It does. Or Chap GPT. Is that for your chapstick answers? Which chapstick smells like cherry? I'm just saying. All right. Michael says, I heard that BitF has the same amount of coins that CLSK, someone said, but I have no idea because they were saying BitF trading so much cheaper to CLSK. That I don't know. I don't know that at all. All right, guys. Now that Vineet comes in and says, "How do you have so much energy?" We are at the end, guys. This has been a fantastic stream. Hold on. I can't end here. No, there we go. We got to go up full screen, bring us up, make it big, all that fun stuff. Yeah, you guys have been fantastic. We've had a great time. On our way out, if you have not yet hit that like button, let's do it. You know what? Let's get it to 45 on the way out. 45. That's, thrive for 45. We'll do it. All right. We will be back. We will be back again on Friday. We're going to do this all over again. And we'll be back. Oh my God. I need to be paying you guys all rent for December. That's how much you're going to see me. But I can't wait. It's going to be a lot of fun. All right, guys. Until then, we are, oh my gosh. I don't even know if there's anybody here. I just looked and I saw there's 43 viewers and 43 likes. There may not be another 2 in the mix. Oh, no, there's 1, 44. All right. If there's one of you, make me happy. Hit the 45. I will, of course, see you guys again soon. Oh, look at that. Look at that. 47, guys. It's a Christmas miracle early. All right. Until next time, everyone, take care. We'll see you again soon. And, enjoy the rest of the week. And for the American viewers, happy Thanksgiving. Enjoy your turkey. Or whatever it is. Some people don't like turkey. Oh, and if you're looking for a laugh, on YouTube is that WKRP in Cincinnati turkey episode. It's a Thanksgiving theme episode. It will make you laugh. So definitely check that out as well, folks. All right. Until next time, take care. Bye, everybody.